Friends, here's something Medicare does that almost nobody understands until they get the bill. Medicare does not look at what you earned this year to set your premiums. It looks at what you earned 2 years ago. Which means, if you had a large income year in 2024, a Roth conversion, a rental property sale, a big IRA withdrawal, Medicare already knows about it. And your 2026 Medicare premium may already be higher because of it, right now, today, and most people have no idea. The rule that causes this is called IRMAA, the Income-Related Monthly Adjustment Amount. It is a Medicare surcharge that adds hundreds or even thousands of dollars per year to your Part B and Part 500 premiums when your income crosses certain thresholds. Today I am going to walk you through exactly how IRMAA works, where the 5 income brackets are in 2026, and how one income decision in 2024 can cost a retired couple nearly $9,500 in extra Medicare premiums 2 years later. You will also see how one of Bob's neighbors, Margaret, made a nearly identical financial move in a different year and paid standard Medicare premiums the entire time. Quick note, this is education, not personalized tax or legal advice. Please talk with a CPA or fiduciary planner before making any income or Medicare decisions. And stay with me for the IRMAA appeal section, because that one piece of information alone may save you thousands of dollars if a one-time event caused your income to spike. Let me start with a story. There's a man. We'll call him Bob. Bob is 67 years old, retired for 2 years, on Medicare. He and his wife live comfortably on Social Security and modest IRA withdrawals, income that keeps them right at the standard Medicare premium level. In the spring of 2024, Bob's financial planner recommends a Roth conversion. Bob has a large traditional IRA. Converting a portion now, while tax rates are favorable, makes sense on paper. Bob converts $120,000 from his traditional IRA to a Roth. He pays the tax in 2024. He feels good about the long-term plan. Then January 2026 arrives. Bob opens his Medicare premium notice, and there is a number on it he was not expecting. His monthly Medicare Part B premium has jumped from $185 to $554.90, a surcharge of $369.90 per month per person. For Bob and his wife, 2 people on Medicare, that surcharge is $739.80 extra every single month. For the full year of 2026, Bob and his wife will pay $8,877.60 more in Medicare premiums than their neighbors who stayed under the income threshold. From one Roth conversion made 2 years earlier, that nobody warned him would follow him here. Now let me show you his neighbor, Margaret. Margaret is 66 years old, also recently retired, also on Medicare, also had a large traditional IRA she wanted to convert to Roth. Margaret's situation was nearly identical to Bob's. Same general income level, same goal, reduce future RMDs, convert to Roth while rates are manageable. But before Margaret converted a single dollar, she called her CPA and asked one specific question. What will this do to my Medicare premiums? Her CPA ran the numbers and told her, if you convert $120,000 this year, your modified adjusted gross income will cross into IRMAA Tier 3. Your Medicare premiums in 2 years will jump by more than $700 a month per person. Margaret made a different plan. She converted $80,000 in 2023 and another $75,000 in 2025, staying under the IRMAA threshold in both years. She converted the same total amount as Bob over 2 years instead of 1. Her Medicare premiums stayed at the standard rate the entire time. Same financial goal, nearly the same total Roth conversion. Bob paid nearly $8,900 extra in Medicare premiums. Margaret paid $0 extra. The difference was 1 phone call and 1 year of patience. Let me ask you this. Do you know what your modified adjusted gross income was in 2024? And do you know whether it crossed any of the 5 IRMAA thresholds? If the answer is no, stay with me, because the next part of this video may be the most valuable Medicare information you hear this year. To understand what happened to Bob, you need to know how IRMAA actually works, because the formula is specific, the thresholds are precise, and the timing is something most people never think about. IRMAA stands for Income-Related Monthly Adjustment Amount. It is a surcharge added to your Medicare Part B and Part 500 premiums when your income exceeds certain thresholds. It is not a penalty for doing something wrong. It is a sliding scale surcharge built into Medicare law. Higher income retirees pay more for the same coverage. The income Medicare uses to calculate IRMAA is your modified adjusted gross income, MAGI. That includes wages, self-employment income, IRA withdrawals, pension income, taxable investment income, Roth conversion amounts, and capital gains. And here is the critical piece. Medicare does not look at your current year's MAGI. It uses the MAGI from your tax return 2 years earlier. This is the 2-year look-back rule. Your 2024 tax return, filed in April 2025, determines your 2026 Medicare premiums. Your 2025 return will determine your 2027 premiums. Social Security Administration receives your income data directly from the IRS. You do not report it to them. They already have it. This is why the IRMAA surprise hits people so hard. By the time the Medicare bill arrives, the income that caused it was filed on a tax return 18 months earlier. There is nothing left to do at that point except pay or appeal. Now let me show you exactly where the IRMAA brackets are for 2026, because knowing these numbers before you make an income decision is the entire ballgame. Medicare uses 5 income tiers for IRMAA. The standard premium applies below the first threshold. Each tier above that adds a surcharge to both your Part B and your Part 500 premiums. For 2026, for married couples filing jointly, Tier 1 begins at approximately $212,000 of modified adjusted gross income. Below that, you pay the standard Part B premium of approximately $185 per month. At Tier 1, income between approximately $212,000 and $266,000 for married couples, your Part B premium jumps to approximately $259 per month. A surcharge of $74 per month per person. At Tier 2, income between approximately $266,000 and $334,000. Part B rises to approximately $370 per month. That is $185 extra per month per person. At Tier 3, income between approximately $334,000 and $400,000. Part B reaches approximately $555 per month, a surcharge of $370 per month per person. This is exactly where Bob landed. His Roth conversion pushed his 2024 MAGI into Tier 3 territory, $555 per month versus the standard $185. That is $370 extra per month per person. Tiers 4 and 5 go higher still. Tier 4 reaches approximately $629 per month per person. Tier 5, the highest bracket for the highest incomes, reaches approximately $629 per month as well under current 2026 estimates, with Part 500 adding additional surcharges at each level. The single filer thresholds are roughly half those numbers. If you file taxes as a single person, Tier 1 begins at approximately $106,000 of MAGI. This matters enormously for surviving spouses. When one spouse passes away and the survivor shifts to single filer status, the IRMAA thresholds cut in half, sometimes pushing them into a higher tier even if their income has dropped. We will do a full video on the widow IRMAA impact in the future. For now, the key point is this: if your filing status changes, your IRMAA thresholds change with it, and not in your favor. Now, here is the IRMAA detail that surprises almost everyone the first time they hear it. IRMAA operates on cliffs, not ramps. If your MAGI crosses a threshold by even $1, you jump to the full surcharge of the next tier. $1 over $212,000, you are in Tier 1 for the full year. $1 over $266,000, you jump to Tier 2. The entire surcharge, the entire year. This is why the planning conversation, the one Margaret had and Bob did not, is worth every minute. One income decision made without checking the IRMAA cliffs can cost a retired couple thousands in a single year. Stay with me, because there is one more piece most people miss entirely, and it may apply directly to your situation if your income spiked in any recent year due to a one-time event. It is called the IRMAA appeal, and it exists specifically for situations like Bob's. If your income in the look-back year was higher than usual due to a specific life-changing event, retirement, reduced work hours, divorce, death of a spouse, loss of income-producing property, you can request that Medicare use a more recent year's income instead. The form is called SSA 44. You file it directly with the Social Security Administration. If approved, your IRMAA is recalculated using the more recent lower income, and your surcharge can be reduced or eliminated entirely. Now, a Roth conversion is not typically considered a qualifying life-changing event for an IRMAA appeal. It is a voluntary financial decision, so Bob's specific situation does not qualify for the appeal. But if you are watching this and your income spiked in the look-back year because you retired, lost a spouse, or had another qualifying life event, the SSA 44 is absolutely worth filing. We will do a full deep dive on the IRMAA appeal process in a future video. For now, write down SSA 44 and check whether your income spike had a qualifying cause. Alright, let's put Bob's complete dollar picture on the table. Bob's household magi in 2024, before the Roth conversion, was approximately $180,000. Social Security, modest IRA withdrawals, and a small pension. Bob converts $120,000 to Roth. His 2024 magi jumps to $300,000. $300,000 sits inside Tier 3, between $266,000 and $334,000 for married couples filing jointly. At Tier 3, Bob's Part B premium is approximately $555 per month per person versus the standard $185. For Bob and his wife, 2 people on Medicare, the combined monthly surcharge is $740 per month, every month of 2026. Over 12 months of 2026, that is $8,880 in additional Medicare premiums. And there is also Part 500. Each IRMAA tier adds a surcharge to your prescription drug coverage premium as well. At Tier 3 in 2026, that adds approximately $57.70 per person per month. For both Bob and his wife, the total combined IRMAA surcharge for 2026 across Part B and Part 500 is approximately $10,264 for the year. $10,000 from one Roth conversion made 2 years earlier. That touched a threshold nobody warned Bob was there. Now let's look at Margaret. Same conversion goal, reduce future RMDs, move money to Roth, pay tax at current rates. But Margaret spread the conversion across 2 years. In 2023, Margaret converted $80,000. Her magi for that year stayed at approximately $200,000 under the Tier 1 threshold of $212,000. Standard premium in 2025. In 2025, Margaret converted another $75,000. Her magi that year stayed at approximately $210,000, still just under Tier 1. Standard premium again in 2027. Margaret converted $155,000 in total, more than Bob's $120,000. Her Medicare premiums never moved. The difference was not the amount converted. The difference was knowing where the cliffs were before crossing them. And this brings us to the planning principle that applies to every income decision a retiree makes, not just Roth conversions. Before any income event in retirement, a conversion, a property sale, a large IRA withdrawal, a capital gains harvest, the first question is not what will this cost in income tax? The question is what will this do to my magi 2 years from now? Because the income tax cost shows up on next April's return. The Medicare cost shows up 2 years later, often as a complete surprise. All right, friends, let's bring this home with a checklist you can use before your next income decision. I want you to imagine we're sitting at your kitchen table together, coffee between us, notepad open, and I'm walking you through 5 questions every retiree needs to answer before they make a large income move. First, do you know your current magi and which IRMAA tier you are in right now? Pull your most recent tax return. Find the modified adjusted gross income line. Compare it to the 5 IRMAA thresholds for your filing status. Write down which tier you are in and how far you sit from the next cliff. Second, do you have any planned income events in the next 2 years that could push your magi into the next tier? Roth conversions, property sales, large IRA withdrawals, business income events, any of these can spike your magi in the year they occur and trigger an IRMAA surcharge 2 years later. Map your planned income events against the IRMAA thresholds before you execute them. Third, if you are planning a large Roth conversion, have you modeled a multi-year strategy like Margaret's? Multi-year conversions are not always the right answer. Tax rates, account sizes, and RMD timelines all factor in. But if a single-year conversion would push you over a tier cliff, the multi-year approach deserves a serious look with your CPA. Fourth, do you know the IRMAA their appeal process and whether any of your recent income spikes qualify? If you are already paying an IRMAA surcharge and your income spiked because of a qualifying life-changing event, not a voluntary financial decision, but a life event, file Form SSA 44 with Social Security and request a redetermination using more recent income data. Fifth, does your financial planner or CPA specifically model IRMAA impact before recommending large income events? Not all planners automatically run the IRMAA calculation alongside income tax projections. It is a completely fair question to ask. Before we execute this conversion, can you show me what happens to my Medicare premiums in 2 years? If your planner has not raised this question, raise it yourself. These 5 questions will not prevent every IRMAA surprise, but they will make sure you never step off a tier cliff without knowing it was there. Here's my challenge to you after this video. This week, pull your most recent tax return and find your MAGI. Write it down, then find the 5 IRMAA thresholds for your filing status and write those down next to it. Draw a line showing where you sit and how far you are from the next cliff. Second, if you have any large income events planned for this year or next year, bring this video to your next CPA or planner meeting. Ask them to run the IRMAA impact alongside the income tax projection, 2 years out, not just next April. Third, if you are already receiving an IRMAA surcharge and your income spiked due to a life event, look up Form SSA 44 this week. You may have grounds for a recalculation. Bob is appealing his 2026 IRMAA now. His conversion was voluntary, so the standard SSA 44 appeal does not apply to him directly. But he has already spoken with his CPA about keeping his 2025 MAGI well below the Tier 1 threshold, so 2027 premiums stay clean. Margaret has never paid an IRMAA a surcharge. She also never stopped converting to Roth. She has simply continued doing it one careful year at a time, always checking the cliff before she crosses. The IRMAA rule has not changed in its essential structure since Medicare Part 500 was introduced in 2006. The income thresholds adjust slightly each year. The 2-year lookback has been there the whole time. You can always earn more money. You cannot reach back 2 years and unconvert a Roth or unsell a property once the MAGI has been reported to the IRS. Medicare's 2-year lookback is not a trap if you know it is there. It only becomes a trap when you make an income decision without checking where the cliffs are first. If this helped you see your Medicare premium picture a little more clearly today, do 3 things for me. Hit that like button so YouTube shows this to more retirees who are about to make a large income decision before they find out about IRMAA from a Medicare bill 2 years later. Subscribe to The Quiet Retirement for more plain-spoken Social Security and Medicare explanations, the rules that actually affect your retirement income, one video at a time. And in the comments, tell me whether you knew about the 2-year IRMAA lookback before today. And if you have already been hit with an IRMAA surcharge, drop your experience below. I read every comment and your story might help someone else plan around it. I'm Uncle John, reminding you your money is important, but your time and your health are priceless. Let's use the rules to your advantage, not theirs. I'll see you in the next one.